The NAB's chief economist is Oster, who joins me now. Alan, always good to chat to you about this. This is fundamentally the problem at the moment. You say there are genuine signs that the interest rate rises we've seen, that all of the catch up with inflation is now genuinely starting to bite, not just consumers, but business as well.
That's right. We had a very low growth rate in the September quarter. And what our survey is basically saying is the outcomes may be a touch above long run average, but only in the labour market. Confidence is, as you said, down to the levels we haven't seen since 2012 outside of COVID. And, part of that story is forward orders. They're basically at levels that we haven't seen since 2012 again. And, particularly retail, wholesale, and what we might call consumer services. So, it's basically not good. We would say that in the December quarter, at best, you might get another 0.2. You might get something weaker. So the economy is, by the end of the year, is going to be growing at about 1.5%, which is about half of what it was growing same time last year.
Is there a point here where companies really have to start making decisions about employees? I mean, that's the thing that's really propped up Australia's economy, given the fact that the consumer makes up more than half of our economy. And so from that point of view, if something breaks in the employment markets, that's also likely to lead to a swifter slowdown in our economy.
That's right. Employment's critical. What we see when we look at our own internal data, so we can see each week the number of NAB customers who've been paid the dole, and at the end of November, it was still really low. So I think the labour market's okay. The problem's going to be that if the economy is growing at the pace we're talking about, let's say it generates 20,000, maybe less jobs per month, where you need about 40,000 to basically keep unemployment where it is. So I could see unemployment at 4.5 by this time next year, and yet employment might grow all the time. So it's not as if there's going to be huge sort of firings. It's just that on this projection, we're still going to basically see unemployment up best part of 200,000 people from here. And, the Reserve Bank's aware of that. And I think we still think there's a chance that they'll do one more rate rise in February. I think they might be now looking a little bit more carefully about where the economy is, and whatever they do, whether they do or don't do it in February, I think they'll be cutting by this time next year. They'll cut slowly. But, essentially the message is we hope the consumer can survive by juggling between trying to get extra jobs or cutting back on the consumption, which I think is going to be the main source. And if you can do that and unemployment doesn't get away from you, then I think we can struggle through, and by end 24 and into 25, things will look a lot better.
Okay, but I did hear you talking about the stresses inside households, that you're also tracking data of the number of people who are using payday lenders and those very short-term, high-interest rate type of finance facilities. Just explain a bit of that.
Well, what we do is, obviously, as a bank, we look at any piece of data we can possibly get to get a better feel. And, we run things across the systems, and the systems have identified a few things that are interesting. And one is much more use of, essentially payday lending, and also essentially pawn shops. You take your stuff in and you get money back. So that's not making me feel happy in terms of what the consumer is going to do. The consumer is still not defaulting. But, to say that they're not essentially troubled and worried is also not true. It's clearly showing up in the data. And, when we look at our data for Black Friday, it looks a little bit better than last year, but not a lot in terms of retail. But when you add the total services in, now, okay, some of it's petrol, but you basically don't get much growth at all in consumption in the November month. And so that's a bit weaker than what we had this time last year.
Yeah, it's interesting. I'll tell you what, Alan Oster, these are good warning signs, and obviously something the Reserve Bank will be watching very closely as well. The Chief Economist at the National Australia Bank, many thanks for your time today.
Thanks, Ross.